So, imagine a business where customers voluntarily line up, hand over their keys, pay premium prices, and then leave in like 15 minutes. And all of this is for a service they literally, legally, or mechanically cannot avoid.
Right, the kind of service you just can't skip.
Exactly. And, we aren't talking about some trendy sauce product with a huge churn problem here. We are talking about motor oil.
Motor oil, yeah.
Because it seems like every time you open up a business journal or scroll through your feed these days, the spotlight is just aggressively pointed at the exact same thing.
Oh, always. It's always a flashy tech startup.
Right. A revolutionary new app or, some disruptive software that promises to change the very fabric of human existence. And I mean, it is incredibly seductive.
It really is. It grabs all the headlines.
It does. But I want to talk directly to you for a second. Whether you are, say, a corporate professional sitting at your desk right now, quietly eyeing an exit strategy from the rat race, or an aspiring business owner looking for your first real venture.
Or even an existing franchisee trying to figure out how to expand your portfolio.
Exactly. I want you to ask yourself a question. In a world absolutely obsessed with that flashy, high-risk tech glamour, where is the quiet, reliable wealth actually being built?
Well, it's rarely where the loudest noise is, I can tell you that.
Yeah.
Yeah, the truly reliable wealth, I mean, the cane that survives market corrections and shifting consumer trends, it's usually found in foundational, essential services.
The boring stuff.
Right, the non-negotiables of daily life. The things that people simply cannot avoid doing completely, regardless of what the stock market is doing that day.
The non-negotiables. I love that. And that actually brings us to our mission for this deep dive.
Let's get into it.
We are going to completely deconstruct a highly recession-resistant essential services franchise model. Today, we are looking at Grease Monkey.
A fascinating model to look at, honestly.
It really is. Our goal today is to really unpack its operations, its unit economics, and its scalability. We want to understand exactly why this specific model is quietly capturing the attention of some very smart, very strategic investors who are looking for multi-unit growth.
And there's a good reason they're paying attention.
Okay, let's unpack this. Because to understand the financial opportunity, we first have to understand the footprint and the history. I mean, this is not a new concept being beta tested, right?
Oh, not at all. No, Grease Monkey was founded way back in 1978.
Wow, okay.
Yeah, they're headquartered out of Denver, Colorado, and they have spent the last 4 decades plus really building an absolute fortress of a brand.
And what's their position in the market right now?
Well, they're currently the nation's largest independent franchisor of automotive oil change centers.
Largest independent. Okay, and their footprint is massive, right? We're looking at almost 600 locations.
Yep, almost 600.
But it's not just domestic. They are operating internationally, too. I saw they have a presence in Mexico, China, Colombia, Saudi Arabia. They are literally serving over 2 million customers every single year.
It's a huge volume.
It is. But I don't just want to list statistics here because, as we always say, a franchise is only as profitable as its customer demand.
Exactly. If the consumer behavioral economics don't make sense, well, the unit economics will eventually collapse.
Right. And their core operational philosophy, like the thing that actually drives that consumer behavior, is boiled down to 4 words. Fast in, fast out.
Fast in, fast out. That is the entire engine driving the consumer side of the business. It is a hyper-focus on convenience.
Right. Because they are promising oil changes in under 15 minutes.
Yeah.
And absolutely no appointments needed.
Which is huge.
It really is. When I was looking at this, it immediately struck me as the drive-through coffee of the automotive world.
Oh, that's a perfect analogy.
Right. Think about it. Drive-through coffee completely changed the morning routine because it removed the friction of, having to park, get out of your car, stand in line, wait for a barista.
Right. It just eliminated all those steps.
Exactly. And Grease Monkey is doing the exact same thing for vehicle maintenance. It is entirely built around removing friction for the consumer. You do not have to call ahead. You do not have to rearrange your entire Tuesday afternoon. You just pull up when you see the light on your dashboard.
And what's fascinating here is, if we connect this to the bigger picture, the psychology of that friction is just incredible.
How so?
Well, in traditional automotive repair, it is a highly scheduled environment, right?
Oh, yeah. You call, and they're booked out for a week.
Exactly. If a customer needs an oil change, but they have to wait 3 days for an open slot, what do?
They put it off.
Right. They delay it. They ignore the dashboard light for another week, maybe a whole month. But by operating on a pure convenience model, under 15 minutes, pull right in, a franchise owner captures a massive amount of impulse traffic.
Just people driving by who see the sign.
Exactly. Impulse and immediate need traffic.
Right.
You are entirely shifting the consumer behavior from, oh, this is a massive chore, to, hey, I can get this done on my way to the grocery store.
I've got 15 minutes right now.
Yes.
And that psychological shift, that has to translate directly to the franchisee's P&L statement, right? Because if you remove the barrier to entry for the customer, you're fundamentally changing the volume dynamics of your daily operations,
Precisely. It translates directly to high-volume daily throughput.
meaning a lot of cars.
A ton of cars.
Yeah.
You are maximizing the revenue potential of your real estate every single hour because the bays are constantly turning over.
You aren't just sitting around.
Right. You aren't letting a car sit on a lift for 4 hours while a mechanic waits for a specialized part to arrive. It is a continuous flow of revenue generation.
Now, there is another detail here that I think plays a huge role in that customer-first approach. You mentioned earlier that they are the largest independent franchisor of automotive oil change centers.
Yes, independent is the key word there.
Right, that word seems like a very deliberate strategic positioning. What does that actually mean operationally for the person owning the franchise?
Well, it's a massive operational advantage because in the automotive fluid and maintenance space, a significant portion of the landscape is directly owned by or tied to massive global oil conglomerates.
Oh, like the big corporate oil brands.
Yeah, exactly. And from a business strategy perspective, a conglomerate's primary objective is often to push their specific proprietary brand of oil down the supply chain to the consumer.
Right, they want to sell their own product.
But Grease Monkey's independent status gives the franchise owner a highly flexible, customer-first business model. You are an independent service provider.
So you aren't locked in.
No, you have the flexibility to offer a variety of options, different brands, different price points, different synthetic blends options that actually fit what your specific local consumer wants and needs.
Okay, so you aren't just a distribution node for a corporate oil giant. You actually get to operate like a local business catering to your neighborhood.
This-
That has to be a huge selling point for building local trust and repeat business.
It absolutely is.
But, okay, let's play devil's advocate for a second. If you are capturing all this impulse traffic because you're independent and fast, you inevitably hit a massive operational bottleneck, which is the labor.
Yes. The labor puzzle.
Right, because high volume is fantastic.
Right.
Having cars lined up because you are so convenient is the dream.
Yeah.
But 15 minutes is incredibly fast.
It is very fast.
And frankly, speed usually kills quality. As an investor looking at this, my immediate thought is liability. If a drain plug isn't tightened, an engine gets ruined.
Sure.
So how does an owner actually manage that kind of rapid throughput without catastrophic errors, especially if they aren't a master mechanic themselves? I mean, wait, if I'm leaving my desk job to open one of these, do I need to know how to rebuild a transmission?
No, absolutely not. And that is the exact barrier that keeps most corporate professionals out of the automotive space. They assume they need to be under the hood. But you solve that liability by building a system that relies on incredibly tight operational choreography, not individual heroics.
Choreography.
Yes.
Mm-hmm.
And that is exactly what they have done with their pit crew certified technicians.
Okay, let's break down that mechanism, because if I am leaving my desk job to open one of these, I need to know exactly how this works on the floor. When you look at their service menu, it's not just draining oil.
No, they do a lot more.
They are doing quick battery tests and replacements. They are doing manufacturer-recommended fluid exchanges. And I should note, those fluid exchanges are crucial because they keep the vehicle warranties intact.
Which is a huge deal for the customer.
Right. It saves the customer from potentially catastrophic out-of-pocket repairs. But they are also replacing cabin and engine filters, doing brake inspections, and even replacing brake pads and rotors.
It's a comprehensive list.
It is a highly comprehensive suite of services to execute in a rapid-fire environment.
It is, which is why the proprietary Grease Monkey Technician Training and Certification Program is arguably the most valuable asset in the entire franchise model.
Really? The training program?
Oh, absolutely. It completely solves the labor puzzle. Think back to your drive-through coffee analogy.
Yeah.
A massive global coffee franchise doesn't hire artisan coffee roasters to work the drive-through window.
No, they hire teenagers mostly.
Right. They hire reliable people and train them on a highly systematized push-button machine. The pit crew model works on the exact same principle. You do not have to go out into a highly competitive labor market and try to poach expensive master-level mechanics to change oil and check batteries.
Guess if you had to pay master mechanic wages to do a 15-minute oil change, your margins would evaporate immediately. The business model wouldn't work.
Exactly. Instead, this model is built for business managers, not mechanics. Your job as the franchisee is managing a P&L, managing local marketing, and leading a team.
You're running the business, not the wrenches.
Yes. The proprietary training program allows you to hire standard, reliable employees and put them through a rigorous, systematized educational pipeline. You quickly certify them into a highly efficient pit crew.
So how does that choreography actually play out in the Bay? Like, how do they maintain that 15-minute promise without sacrificing quality?
Well, it's a strict division of labor with standardized call-outs. You have a technician operating in the pit below the vehicle, and they're handling the draining and the filters,
Okay.
while another technician is up top managing the new fluids, doing the battery checks, and communicating with the customer.
So they're working at the same time.
Exactly.
Okay.
It is a synchronized routine. They are taught exactly how to execute these specific services with precision, utilizing a system of checks and balances that prevents those liability issues you mentioned earlier.
And the proof that this mechanism actually works is visible in the customer response. When you look at the feedback from Denver, Colorado to Stockbridge, Georgia, down to Tyler, Texas, the through line in the customer reviews is incredible consistency.
The consistency is key.
People are praising the speed, which we expect, but they're also overwhelmingly highlighting the honesty and the courtesy checks.
The courtesy checks. Those are a brilliant psychological touch point in the consumer journey.
Let's talk about why that matters. They are doing things like checking tire pressure, inspecting wiper blades, and topping off windshield wiper fluid without being asked and without upcharging for it.
Right. It's complimentary.
It sounds like a small operational detail, but in an industry that historically struggles with a lack of consumer trust, where people always feel like they are about to be sold something they don't need, doing something helpful for free is how you build a fiercely loyal customer base.
It completely disarms the consumer. When you provide a courtesy check, you are shifting the dynamic from a transactional interaction to an advisory relationship.
You become their go-to guy.
You become the reliable neighborhood spot. And implementing those courtesy checks consistently across almost 600 locations, that doesn't happen by accident.
No.
It happens because it is baked directly into that pit crew certification pipeline.
But, this raises a really important question for our prospective franchisee.
What's that?
Well, if this proprietary training program and these strict operational procedures are so vital to the unit economics, who is actually supporting the owner in implementing all this?
The support structure.
Because a lot of people fear the isolation of business ownership. You sign the franchise agreement, and then you are just handed a thick manual and told, good luck, see you at the annual conference.
Right, that isolation is a very real fear. But this raises an important point about operational support, because this is where the corporate infrastructure of a mature brand really flexes its muscles. Grease Monkey actually has 139 employees at their headquarters.
Wait, 139 employees?
Yes, that is a massive, dedicated corporate team whose sole purpose is supporting franchisees.
139 people just at HQ? That is substantial.
It is. We are talking about dedicated departments for real estate site selection, localized marketing support, operational guidance, and continuous updates to that training pipeline.
So you aren't out there alone?
Not at all. You aren't inventing the wheel. You are stepping into a machine that has been refining its processes and supply chains since 1978.
Okay, so the operational engine is totally demystified. We understand the consumer psychology behind the friction-free model. We understand how the proprietary training system creates a pit crew that solves the labor gap and protects the margins.
Right.
And we see the massive corporate support structure. So what does this all mean? If we have an operational system that de-risks the labor model and turns over bays rapidly, what does it actually take to buy into that machine? Let's actually look under the hood at the investment numbers.
Well, the unit economics here are very compelling, particularly when you analyze them against the broader automotive franchise landscape.
Give us the breakdown.
The initial investment range to open a Grease Monkey location falls between $245,816 and $761,952.
Which, it should be noted, represents significantly lower startup costs than many of the larger big box automotive repair centers.
Oh, absolutely.
If you are looking at a full-service transmission or engine repair franchise, those build-outs can easily push well over $1 million, sometimes approaching $2 million, just to get the heavy equipment installed and the doors open.
Easily.
So we are looking at a much more streamlined initial capital injection. But what are the specific financial gates to even be considered as an operator?
They require a net worth of $450,000 and a liquid cash requirement of $250,000.
Okay, let's elevate this discussion for a second. When a corporate professional hears a $250,000 liquid cash requirement, it can sound like a steep hill if they are just thinking about what's sitting in their checking account.
Sure, if you're just looking at cash on hand.
But how does that actually play out in the real world of sophisticated franchise financing? How do strategic investors structure this, especially if they are looking at multi-unit expansion?
If we connect this to the bigger picture, that is the key distinction. In the franchise world, sophisticated investors rarely bring the entire investment range in cash. That $250,000 liquid requirement acts as your skin in the game. You bring that liquid portion, and you leverage the rest. It makes this an incredibly accessible entry point.
Walk us through the mechanisms of that leverage. Where is that liquid capital usually coming from, and how is the rest financed?
Well, for a corporate professional transitioning out of the corporate world, that $250,000 is very frequently accessed through retirement rollovers.
Oh, interesting.
Yeah, mechanisms like ROBS program rollovers for business startups allow you to utilize your 401k or IRA to fund your business without triggering early withdrawal taxes or penalties.
That's a huge advantage.
It is. You are essentially investing your retirement funds into your own privately held corporation.
And once you have that liquid capital injected, you are looking at commercial lending for the balance.
Exactly. And this is where the 40-plus years of brand history becomes a massive financial asset for the buyer.
Because of the track record.
Yes. Grease Monkey is a recognized, established brand with decades of historical franchise disclosure documents, the FDDs. Because they have a long track record, it is highly attractive to SBA lenders.
Because banks don't like gambling on unproven concepts. They like predictability.
Exactly. They want a sure thing.
They can look at decades of historical data, see the low default rates, see the consistent unit economics, and feel secure in underwriting the loan.
Precisely. The SBA lender sees the 139-person support team. They see the proprietary training that mitigates labor risks, and they see a resilient, essential service.
Makes sense.
So that liquid capital secures the financing for the rest of the build-out, the equipment, and the working capital.
That makes perfect sense. Now, once you are operating and the bays are turning over, what does the ongoing relationship with the franchisor look like financially?
The ongoing fees are very standard for a system that provides this level of infrastructure. There is a 6% royalty fee, which funds the continuous operational support and system improvements, and a 4.5% ad royalty fee, which drives the national and regional marketing to keep those bays full.
Right, to keep the traffic coming.
But the strategic element that investors really need to pay attention to is the franchise agreement term. It is a 15-year term, and it is renewable.
Why is that specific timeline, 15 years, so critical for the type of investor this brand attracts?
Because a 15-year runway aligns perfectly with the debt amortization of an SBA loan. And more importantly, it provides the operational stability required for multi-unit scale.
So you aren't just opening one and done.
Exactly. When you sign a 15-year agreement, you are not looking for a quick flip. You are not buying a job. You're looking to build a sustainable, cash-flowing asset class.
It's the exact timeline you need to execute a multi-unit empire strategy. You open Unit 1. You utilize the corporate training program to build a strong management team that can run the day-to-day pit crew operations.
Yep.
Once that first unit is stabilized, cash flowing, and the debt is being serviced comfortably, you leverage that success to secure financing for Unit 2 and eventually Unit 3.